Gold price is trying to recover after a brutal sell-off on Wednesday, dropping well over 4%, breaking below the 200-day moving average. All right, John, where does gold go from here short-term first?
Well, after we separate the dead from the wounded, there are going to be a bunch of questions to try to answer in terms of numbers. At the moment, seems to be that gold might elicit some support in the zone from probably 1510 to about 1560. If that were not to hold, and we're back to the objective I told you several months ago, roughly in the 1480s, which is where we started this whole mountain climb back in the early summer. On the upside, however, there's a lot of repair work to be done and a lot of repositioning to take place, namely certainly back up, above that 1620, but more importantly, probably this 1670 to 1720 area really needs to be cemented into place before we can talk of, righting this badly listing ship.
So what about long term, though? A few years down the road, how damaging was this sell-off?
I spoke to a number of seasoned traders yesterday and this morning, and many of the folks like me who have been in this business for 30 years plus were actually, pretty mortified at what took place over the last 3 days with such swiftness.
But if you do look at gold's rally over the last 10 years, gold started this at, $285 an ounce. So, would this then just be a blip?
It's a blip in the sense of what it shows on the chart, certainly. But it's more than a blip for the people who were, guaranteeing us $2,000 gold by now, based on the very conditions which took place. So the perfect storm came and went, and gold reacted less than perfectly. That is where the problem lies. That is where investors might have to reassess, the purpose of being in the game to begin with, and seeing what roles gold might serve in a portfolio. I remain a staunch advocate of that core 10% holding, but certainly for traders and for medium-term players, this opens up a whole new can of worms.
And then my last question on the same point is we saw the GLD sell off about 3.5% yesterday, but it didn't shed any tons. So that to me says that it was moving along with the commodity price, but that there actually weren't any sellers in the market. Does that lend any support, though, to a more positive factor?
It ought to, but we have to remember also that, on the physical side, there were sizable liquidations among retail investors. I talked to a number of coin dealers who were basically, witnessing people panicking out of physical positions that they acquired, in anticipation of the world going to hell this year. Of course, it didn't happen, and now, suddenly cash looks very good, equities don't look too bad. And, if they were sitting on profitable positions, at least they tried to lock in some portion of that. Hopefully, they didn't sell it all.
All right, thanks, John. I really appreciate it. So Wednesday's sell-off was really a game changer in terms of investor and trader psychology.